very quickly. Now, that's not my base case. I think the worst of it is going to be 2025.
So before we get there, though,
Yeah,
one
go
last
ahead.
question: how can you find out about those silent seconds? What is a
I've had a
good way
couple of
to?
people
Yeah,
asking about those.
The only way is to talk to hopefully the borrower knows, but I can tell you, I've seen so many Reddit forums. I've seen so many social media comments on Facebook. They're like, I didn't realize I was underwater. I had no idea
because they're not recorded because a forbearance agreement. It's not a second; it's a forbearance agreement that's pushed to the end of the term modification. Really?
Well. So you had the forbearance. The workout was a payment deferral, and when they first came out, they talked about recording them, and I was like, absolutely, of course we're going to record them. Are you crazy? Like we record the mods. We always record the mods, right?
Yeah.
Quickly that went away. So you don't know. And most consumers don't even know. They don't know. I've seen so many like guys, they were so under stress, a lot of them. Like you just signed the dotted line. Like, wait, you mean I don't have to pay this? Awesome. I mean, you guys know this more than I. You live this, you breathe it.
Yeah.
And so they don't know. And so they might be working with your seller financing guys or, those doing this too. And they might say, well, yeah, this is, so then you need to tell them the way you're going to find it is tell them, go get a payoff quote, right? You need that payoff quote. Okay. If you get that payoff quote, it's going to be on there if they're a good servicer. So that's the way, but it's not going to be on title. And yeah, go ahead.
Cindy asked a question. Can you define bezel?
Yeah, it's my favorite word of this cycle. So this is a word that just means the inherent sort of fraud in the system. And so the Philly Fed did a great paper that said when mortgage investing in mortgage did not stop after the GFC. And in fact, it accelerated. And they said that basically 30% of all mortgage loans that are used for investment were fraud. Like, and that could be non-owner occupancy fraud. That could be the fraud that you're hearing a lot about with straw buyers, or just make up whole portfolios. But essentially, you don't know. So, for instance, let's take the situation where I think it was Chase's nickel or silver. I can't remember. They thought they had millions of dollars worth of silver in a safe for 2 years. They thought it was there. It wasn't until they went and looked and saw it was sand that they realized they had that loss. And so the entire time they were acting like they didn't have that loss. This is the American consumer right now, because not only that, we're seeing Fannie Mae came out with an appraisal letter that said they reviewed over 7 million comps and saw that in 55% of the cases, seller concessions were not accurately placed on the appraisal and didn't reduce the price, leading to inflated appraisals. So, and then you're seeing things down in Texas like Central Appraisal District fraud, where they're not actually doing a good comparable because they basically want a higher market value to get higher property taxes.
Sure.
And so there are just so many different things happening all over the system that are making those prices seem inflated, that the minute you go to turn around and sell that home, that's just a whole different scenario. And so 305,000, I mean, I wouldn't touch that with a 10,000 foot pole.
No way.
Yeah.
So tell me about how seconds are going to become one of the biggest factors that play into the crisis moving forward. You were saying on one of your shows that you think that seconds are going to be a disaster because of the equity being stolen out of people who have no money.
Well, if they do it. Yeah. Yeah. I mean, it's really, it's extraction, it's debt slavery. And, essentially you were just, and what we don't realize in this country is we're actually crushing purchasing power by doing that. It's just the same thing that happened last time. And this is what kills me about it, is that we've already done that to some degree. What I just kind of told you about, people don't really understand. And so to me, this is just signing your life away, but the Freddie program got approved but very limited. And so I don't think it's going to have a huge impact, just because the people that probably would need it or would be in that horrible position will probably not qualify, and they will probably can't even afford the closing fees. Wow. And so I think that, yeah, well, right. And I don't ever like it when government tells us what to do, but dear God, that this is just because what'll happen is those loans. The reason why Fannie and Freddie want to do it is because the banks are being very cautious. And I mentioned how J.P. Morgan already has a 6% delinquency on his home equities. The banks are being cautious. The non-banks need the juice because they don't have deposits and they don't have liquidity, and so they are absolutely dying on the vine. But what happens is just what happens, like with FHA. You keep pushing people into products they cannot afford.
Mhm.
And the thing they do right now, because they have a ton of equity, right? I got 100,000 equity. Let me go grab a hold of it because I need to make medical payments. And I'm going to go ahead and get that phantom equity, which in a year or two is going to be down because, I agree. I think housing price right now is flat and that equity is not going to build up. And then now they have
That's right.
no money and more debt.
Yeah. And more debt and less freedom, in my opinion.
Yeah.
And it throws right back to 2006, where it's like, oh no, zero down payment loan, no problem, because the
Right.
house price is going to keep going up. Equity is going to be built in as the house price
Yeah.
increases.
Date the
Yeah.
rate.
Really?
Date the rate.
Yeah. Yeah.
Really?
You're hoping
It's
appreciation.
mind-boggling. It's actually mind-boggling. Instead of saying, well, I can always refi, they said
Mhm.
date the rate. Well, they meant exactly the same thing. Like what? I mean, it is actually a study in humanity that we have. It hasn't even been that long
No.
since all of this happened, but it's just kind of a study in how the generations turn, how you lose lessons, and I mean, here we are repeating all the same behavior. And seller financing was big in the 80s, right?
Yes.
Back when
Yep.
they had right before long
Yep.
term capital management crisis and S&L crisis. And so, I mean, I think that's yeah, it's coming back.
Fascinating.
It's coming back.
Oh,
One of the reasons Texas didn't get hit as bad in the GFC was because of legislation that came out of the S&L crisis around wraparound seller financing. But not now, they're the biggest in seller financing, right? They were number
wow.
one on that guy's presentation. I saw
Yeah.
a DM it. Yep.
Yeah.
And my kids are wearing my high school jacket and my wife's high school jackets. It's the same thing.
Yeah.
It was in fashion back then. It's coming back in fashion now, but
Yeah.
it's not good news. It's
No.
it's not something to, yeah, be
Yeah.
It's a
happy
bit
about.
wild.
So
Fascinating.
let's focus on the fact of us as note creators and note buyers. What advice would you give these note creators who are doing it now to do it correctly if you were to give them advice? And for note buyers, what would you tell them the best suggestion right now to do?
Follow you guys. I mean, because no, I'm serious, because you take it seriously. You're not in it to get famous. You're not trying to be one of these gurus on, you're legitimately just trying to educate people for success and a space where you have been successful. Because I don't live your space every day. I mean, you guys did a great job at the conference, educating people, providing network opportunities. So that is what I would say. But then,
Mm.
have a good attorney. I would also say, but
Yeah.
and that's just hard these days too, because I don't know, it just feels like you can't trust people to follow through anymore. But you need a good attorney, and you need to understand title, and you also need to understand that legal standing, whether you think you are a armchair lawyer and can read a statute, that does not matter in the courts. Often legal standing has really been dictated at a national level through that Consumer Finance Protection Bureau national servicing standards, and that is possession of the note. And if you don't have it, you are going to be in a world of hurt. And so that is what I would say, is that default doesn't work how you think it's supposed to, and it doesn't work how it says it in the statutes. And it is and if you are, kind of relying on your understanding of the law by reading it off of Google, you're going to be in trouble every single time. And you need experts like you guys to really tell you the tricks of the trade.
And I'm gonna tell you, we're not the only ones, right? We've been through a
No.
lot, but
Mhm.
there's certain things we've never been through. And we have to be honest with ourselves and say, listen, that's why we connect with other people, because every situation is different. It just, you gotta be networked in. We always talk about networking because the fact there's so many possibilities out there that just sharing your experience is key for everything, and being part of groups and part of communications and being part of conferences where you get together with people regularly and just hear it from both sides, buying as well as creating of fears, concerns, worries, and understand from this side, because we're seeing a lot of note creators who create notes and the note buyers buying at par to go get a 12% loan and with no care in the world of it defaulting because that hasn't. And note creators continue to create notes on leverage because hey, listen, it's been working for 4 or 5 years now. I'm going to keep doing it. It's making me money.
I know
David,
creators that are doing 1-page notes and like, oh my goodness, really?
I've,
Like,
I've seen
no.
them. People have sent them to me. I'm just like, you are out of your minds.
Yeah.
But David, you said what I should have said, but the leverage, guys, the leverage, you do not own that thing with all that leverage. Like, and so I think, of course, you're going to use it smart, but that is really the key. Don't over leverage yourself.
Yeah. Yeah. I think people only plan one track. Like it's performing for 12 months. It's going to continue to perform, or that bar has the ability to repay. Doesn't mean they're going to pay.
That's
Right.
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 Life
Things
happens.
happen. Yes. And it
Life
could be no
happens.
blame to the borrower. It could
Correct.
be no blame at all, but you
Right.
have to make sure you're smart with buying that note, that if things happen, you're still covered, and that the investment to value or LTV is decently low so that when things do happen, you have some equity in that deal.
I'm sure all those people at Intel over 10,000 didn't think they were going to be losing their jobs
Right.
or Stellantis or
Yeah.
I mean you're just the layoffs are coming fast and furious now.
Yeah.
Macro Edge, it does a great layoff tracker. I encourage people to look at that, but they're coming every single day, closures, bankruptcies. We have entered the default cycle whether mainstream media wants to admit it or not.
Oh boy.
And by the time they report it, it's too late.
Yeah.
It's way too late.
Yeah.
Mhm.
And
Way
we,
too
we,
late.
we do a private call on a weekly and bi-weekly basis with very seasoned people. And if you are listening, you're curious, let us know. We'll get you more into it. But we're trying to take the temperature of everybody. That's the point of networking, is
Yeah.
get the idea of what's happening out there outside your little bubble.
That's
Because you're
right.
going to learn different rules, laws, as well as what the population of notes are right now. Because
Mhm.
your notes are doing one thing doesn't mean the whole market is. And there's rules changing constantly. Texas passed a law that doesn't allow second liens to be, servicing fees to be attached to the borrower. It's over 10%. Things like this we didn't know a year ago, but by networking with the right people is crucial, right?
Yeah.
I'm a big believer. Don't over leverage. Don't kill yourself. Make sure you have the rainy day grandma fund. I'm a huge belief in that. And other people say, you know what? Take the equity of your house and go buy properties. Don't use your credit card to buy investments. Get your house in order first and then start doing it. Same thing with borrowers, right? Make sure you have some equity in the house because you never know when you're going to need it. It's scary out there.
It really is.
I'm amazed by the housing things because everything out there told us things are selling within a week, within 24
Mhm.
hours. But just like probably going to the casino, hey, I won money. You didn't learn about all the other losses that we had.
Right.
Yeah. Very interesting, Melody. It's been great having you on here. Any other questions, Dave, before we wrap up? Or are we
You
good?
go with your final question, man.
So, I mean, you've you've seen a lot. You've been through a lot, and so we're trying to always kind of predict the future here. What do you see coming? Like it sure sounds like we're looking at another wave of defaults. Is that what you see, or what do you got?
Yeah, we are, but I also think we shouldn't be looking at all the old places. Like they're not going to be on the bank's balance sheets.
Yeah.
We'll see it at the non-banks, but I'm more curious about your world, and so I think that they're happening, um, and so just and where it started. So the servicers, I talked to them. I still have clients where they first started seeing it back in October is they were get bankruptcies. And because we were seeing bankruptcies increase, not yet foreclosures because all the programs, but they would run title for bankruptcy and they'd be like, holy cow, they'd have to go back to the investor and say, hey, you're in third position. You're in fourth position. And the
Mhm.
investor's like, what? Like what? And so I think that where people are expecting foreclosures, that's not going to happen because of all the government intervention, or if it happens, it's going to happen so slowly. But there's a lot of properties out there that I've seen that are already vacant that the counties are soon going to be waking up and saying, wait, what's happening over here? They haven't mowed their grass, and it's more and more and more because investors walk away. So yes, we've entered the default cycle. There will be push and pull, and it won't show up, as it'll look a lot better than it is. I
Mhm.
think that what we have just seen sales crater. We're hearing that the builders also are seeing even more reduced traffic this month. So that'll be interesting.
Oh,
We might get a little bit higher in existing from the rate issue, our rates going down a little bit. But I think we will see, by this time, year over year declines from this year. Case Shiller takes forever. So it'll take some time, but we'll see around a 5% reduction in prices this year, in my opinion, by the end of it. And then then essentially I think 2025 is where you're going to see double digit drops. Right now I think about a 12%, but if we have any kind of credit event, if we have massive job loss, all of that just goes on steroids and it just happens faster. And
Mhm.
people shouldn't be surprised if it happens as fast as it did in the run up to home prices in the first place.
Mhm.
And so I think that, we've got a 5-year correction in front of us, if not longer. But we don't know how is the government going to respond.
yeah.
And that is truly, I think looking at that will help us understand. But I think that the horse is out of the barn because of the private note space and because of so much financing that happened outside the mortgage
Yeah.
banks through personal loans and things like that.
Yeah, I think the zombie foreclosures are probably gonna be coming back, but I agree
Absolutely.
with you, not on the bank balance sheets. It's gonna be investors who just went belly up, who are saying, crap, I just bought create a bunch of notes that I could not afford. What do
Right.
I do now? I
Right.
think the wrap notes are gonna be hit too, because these people are wrapping with no equity. And then
And
the
and that's
borrower
happened.
saying, I'm
Yeah.
done.
I think it's Sonoma out in California.
Yep.
There was one big guy that came out. You guys saw that story where he basically bought the whole town and now
Hmm.
it's all in foreclosure. I think you're going to, and then like you mentioned immigration, Nathan. I
Yeah.
went down to Colony Ridge.
Mhm.
They had a 47% foreclosure rate down there. I mean, these 30,000 homes, it was insanity because it was more seller financing versus a
Wow.
bank, and they could get away with that foreclosure rate. So
Mhm.
anyway, the story is out there. It's just not being told in mainstream media.
Hmm.
It's
So
it's a
where can we follow
bittersweet.
you,
Yeah.
Melody?
Yeah. How can we follow you? Those who are curious, I'll put the link in. You're going to see all the links for Melody, her email, as well as her social media, whole bio. If you need that, please go back to the chat box or send me an email. There's a whole list of information. Melody has been on YouTube, and we're talking beforehand about Twitter and stuff like that. The idea is just to listen, right? You may not have to ask the questions, just follow and listen.
Mhm.
And some things you may not understand, right? There's things that I don't understand, Nathan understand, but
Mhm.
just start
I don't
becoming
understand.
knowledgeable,
Right.
right?
Mhm.
And just listen to stuff and just start picking up the here and there things, because being in the know will be the actual place where you're gonna be, right? We have someone comment on LinkedIn saying that your facts, they follow you on YouTube. That's
Mhm.
awesome, right? Just
Thank you.
understanding what the market looks like is
Right.
key. And
Right.
what's coming 6 months down the line,
Right.
possibility, and what we're
Right.
seeing or what we're not hearing at all, which is
Right.
even more scary.
Because your leading industry analysts are not going to tell you. Mark Zandi, for instance, 6 days ago was talking about a soft landing, gets unemployment, calling for rate cuts. This is an industry analyst in the housing. And he led my executives right off a cliff as well back during the GFC. They
Mhm.
aren't looking forward, they're looking backward. And
Mm,
so things may look okay on the surface right now. If you're not paying attention to what's happening underneath the surface, you will always be surprised, just like you were during the GFC, if you were old enough.
yeah, awesome. Well, Mel, we're gonna disconnect from the live feed. Hold on for after hours. And thank you very much for joining us on this Friday afternoon. Take care, everybody.
Thank you
We'll
so
see you guys
much.
soon.
Thank you.